All right, all good. All right, yeah, today, guys, we're going to go over SMT confirmations, or swing confirmations, sorry, and then how to filter out first stage, second stage SMTs, and just SMT sequences in general. So let's go ahead and get into that right now. So this will be a lesson, and then I'll provide some examples, and I'll go over a few questions, if any at all. So now, let's go ahead and start. So what can the market not reverse from? Or yeah, what can the market not reverse without, basically? It cannot reverse without a swing point, right? But the market also can't reverse without SMT, right? You go into any reversal or retracement in the market, you will find these two things. So this is why I combine them both, right? I combine swing points, or require swing points and SMT, right? So how can we do that? How can we combine SMT with swing points? Well, one of the easiest ways is to just have a Kraken correlation between candle 1 and candle 2. So you can trade this as a candle 2 reversal candle, right? If that's the type of trader that you are, or you can wait for the candle 2 closure. You can look back on candle 2's close and see that there's an SMT here, and that would give you confidence to trade candle 3 lower, right? The next option would be you have a candle 2 closure with no SMT between candle 1 and candle 2. So then you would require an SMT between candle 2 and candle 3. So this is when you would trade candle 3 lower, right? While the other asset is actually creating a candle 2. So pretty simple there, right? Now the next confirmation for swing points, the type of Kraken correlation is a PSP. This is between two or more correlated assets. Asset on the left will create a bullish close when they both hit a key level, right? Or maybe create an SMT. We confirm a swing point with, we confirm SMT and key levels with swing points. Now that swing point close basically will close bullish on one asset. On the other asset, it will close bearish, right? So this can indicate a reversal in the opposing direction. Now, what I'm kind of doing here is this is kind of the lowest probable, right, sequence. PSP is a little bit more high probable. Now we're getting into the highest probable swing formation confirmation, and that is a two-stage PSP. This is when you look back and you have a PSP, right? But you also have SMT between candle 1 and candle 2, right? So this would indicate that this asset can reverse, basically, right? On the other asset, it's going to look a bit weird, where technically this asset creates a candle 2, and this is technically your candle 2 over here, right? It's a bit weird, but you would trade that next candle lower, right? Now this one's a little bit easier to spot. This is just when you get a PSP, right? So a candle 2 PSP, right? One asset closes bullish, another one closes bearish, and then this asset sweeps out that candle 2. So now this is now a candle 2. Well, this asset remains that candle 2 with an SMT between candle 2 and candle 3. So you trade this asset because it's weaker, basically, right? And this is a continuation PSP. So you will see the sequence that we use this with, but you're basically going to use it on your way to withdrawal liquidity away from a true reversal, right? So let's say a lot of people get this wrong, right? They're going to think this is a PSP to go higher, but if it doesn't make sense, if it's not hitting a key level or whatnot, this is just going to be used as your tracement, basically, right? So this next candle will retrace higher and actually reverse off of that previous candle's high, which is the PSP high, creating a swing formation. So this asset's creating a candle 2. Well, this asset does not. It will just continue, right? So now we're going to get into SMT sequences, right? So how to spot your first stage SMT, what you're going to be using it with. So your first, thing that you can use your SMT with is with key levels, right? So in this case, obviously highs and lows. So this is just when you have your first stage SMT with a high or a low. Your next stage SMT, right, is going to be with a fair value gap. So these are just the key levels. We only use SMT with fair value gaps and highs and lows. That's the only key levels that we really care about, to be honest, right? Now your next first stage SMT is when you hit a key level, but there's no SMT with the key level itself, right? So you have to demand some sort of, confirmation to that, some SMT confirmation. So this is one of the ways that we can use it, right? We just went over this. So SMT between candle 1 and candle 2, like this, or a PSP. So those are the 4 different types of first stage SMTs, right? So now your second stage SMT is, like we mentioned, here's your first stage SMT with a swing point high, and your next stage SMT can be between the previous candle's high, right? So we're not using the lower time frame as our two-stage SMT. We're actually using a swing point, right? That swing point between candle 1 and candle 2 or candle 2 and candle 3 is your second stage SMT, right? It's no longer these random highs and lows on the 5-minute. This on the lower time frame is a swing point high, right? These swing points on the higher time frame. So this is what it would look like over here. Here is the same thing, right? Your second stage SMT is between swing points, but this is just the first stage SMT with a gap, the fair value gap. Now here is the same thing, but you don't have your first stage SMT with that key level itself, right? Your first stage SMT is between a swing point, and you get that next stage SMT with candle 2 and candle 3, right? I've taught you guys this sequence where the first cracking correlation is between candle 1 and candle 2. The next cracking correlation is between candle 2 and candle 3. What is this? A strength switch. Right? Or the next stage, second stage SMT sequence is you have that first stage SMT with a key level and then a PSP, right? Here's the same thing, but your first stage SMT is within a gap, right? This is that sequence where you don't have key level SMT, but you do have PSP and a SMT between swing points, right? This is a very good confirmation as well. Here's with the high and low. Here's with a gap. And this is the highest probable two-stage SMT. It's when you have an SMT between a key level and a two-stage SMT, right? So you have SMT between swing points, but also you have that candle closure being a PSP. So this is the highest probable version. Here's the same thing, but with the fair value gap. Now we're going to get into, applying this, but with models basically. So with key levels, what to target, etc. This is not going to be anything completely new, but it's going to help it kind of put it all together. So we're always trading swing points, right, away from reversals, right? So where do we trade swing points away from? Right, these key levels, right? So if we want to target ERL, you want to trade away from some sort of key level, right? Either another swing low or a fair value gap. So this is just internal to external, right? Here's our swing point, right? T-Trades, this is all from, you can learn this all from T-Trades course, nothing new. Candle 1, candle 2, candle 3, right? Valid candle 3 closure, you can trade candle 4, right? Valid candle 2 closure from ERL, candle 3 expansion to IRL, right? This is just the fractal model, ERL to IRL. This is order pairing ranges, where price takes out one side of the range, we can trade it to the opposing side of the range. So now adding our swing point confirmations to this, right? Our two-stage SMT. We can have SMT with a gap, we know that, right? And then we can have SMT with the previous candle's low. So go on YM today, that's exactly what you see, a two-stage SMT between swing points, right? From that key level, right? So going from internal to external, right? What's another way we can confirm this, right, is SMT with a key level, so that high or low. Sorry, my dog is messing with the bone right now, making hella noise. And our second stage SMT can be with a swing point or a PSP. Hold on. Dude. Sorry, but yeah. So here's another sequence, right? External to internal. Your first stage SMT is within the swing point itself. That's a key level. Second stage SMT with a PSP. Here is order pairing ranges, right? Where there is no SMT with a key level, as you see, but we do engage with the key level, so we can expect a reversal, but we need a two-stage SMT. So this is where this candle here could be a PSP, and we run out that candle's low. There's your first stage SMT, or your first stage SMT is actually the PSP itself, and then we run out that candle's low. There's your second stage SMT, right? So just trading this to the opposing side of the range. Now we're going to get into what we want to see when we engage with a key level. What do we want to see when we engage or create SMT, right? So we want to see a reversal signature. So that V-shaped signature, right? Having that CSD, right? Expansion, reversal, expansion. This is your confirmation, right? So once we create this expansion away from that level, we want to see a fair value gap being created. So we want to see displacement away from our true reversal. So this fair value gap becomes very high probability to enter from. So whether this is the 5-minute chart and you want to enter on the fair value gap itself from the first, maybe CSD if that's your type of trader, or this is even higher probability, right? You can trade the fractal model. So you can pretend that this is a swing point. This is your candle 2 closure. And let's say this is your candle 3 open. Maybe get that intra candle CSD, candle 3 opens up within that fair value gap or opens low into it. Then we get that CSD to confirm candle 3, right? This is very high probable. So basically trading a propulsion block from the fair value gap that was created after that displacement or that true reversal. Very high probable sequence. Right, so when you put it all together, this is what I'm talking about with that fair value gap, right? So here you have no SMT with that range low, but you have your PSP, your 2-stage PSP, right? So you wait for that candle 2 closure, or if you're the type of trader to trade a candle 2, you can trade it because you have that small wick. So here is the daily candle, so we can absolutely trade this, right? Because if this day supports our reversal profile, then we can trade it, right? It has that small wick and whatnot. So this is what it looks like in the hourly time frame, where your first stage SMT is between maybe that previous day's low. Your second stage SMT is between a swing point, right? So there's your 2-stage SMT. So you can already look to trade this, right? Now, when we displace away, right, we're going to create a gap, right? This is where we want to look for continuations, right? This is the highest probable continuation model, right? Is after a fair value gap is created from your true reversal, right? So here's where we can look for another swing point. Right, so here you get that 2-stage SMT, and we can look for continuations beyond that, right? Right, so this is a PSP sequence for continuation. This is when the PSP itself is a fair value gap low or high. So this is a bullish fair value gap. So see how the PSP itself here is the fair value gap high. So when that gets ran out, right, and creates an SMT there, it's an SMT fill and a 2-stage PSP simultaneously. So this is a very high probable model for continuation, right? You can anticipate, you can have this on the weekly, the daily, the 4-hour, the 1-hour, the 30-minute, doesn't matter. It all works the same. That's the beautiful thing about it. It all works the same. So remember this sequence going from IRL to ERL, right? So pretend it's a weekly candle, maybe daily candle. The previous day's low gets ran out. You can target this internal range of liquidity or this external range of liquidity away from this internal range of liquidity, right? This is a high probable external to internal range liquidity. This is when a PSP forms from external range liquidity, and we're trading away from a 2-stage PSP. The opposing side of that PSP or that candle 2 is a fair value gap, right? So see this PSP, right? It gets confirmed by the 2-stage PSP, and you're just targeting that PSP low basically, which is a fair value gap high or low, right? So it's essentially the same thing as this, right? Now this is the universal model. The most high probable model that there is, in my opinion, is after a true reversal forms, when price actually displaces away, we create that gap, right? So you either want to enter from this gap, right? This is also the universal model as well. You don't have to have SMT fill with the gap, but when you have SMT fill with this and a 2-stage PSP away from a true reversal, right, with the drawn liquidity intact, this is the highest probable model in the market, in my opinion. So this can be a model in itself that you could trade, right? So that is going to wrap it up for today in this lecture. The next lecture, we'll go over how to profile weekly, daily candles, 4-hour candles, kind of with the same concept, right? So now let's get into some examples of some sequences and whatnot. So here, coming into HO, what are we coming off of? Series, just a large expansion, right? Where the previous week candle creates SMT with this weekly low, right? Now, that closure, if I go over here, is a PSP. You see this closer? So that's our first Kraken correlation, right? Is this swing low? That's our first Kraken correlation. You see CL actually takes out that low, right? Your next Kraken correlation is the candle close itself. So that already is a 2-stage PSP, right? Already, but now you get right that or not, sorry, it's not a two-stage PSP. It's just a two-stage SMT, right? Here's your first stage. Second stage SMT is the closure itself. Then it's followed by a two-stage PSP. Like I said, this is the highest probable model, right? So if we go back to our little thing here, let's go back to that external range to internal range. What do we have? Two-stage PSP to retrace back into a range, right? Where we have internal range liquidity, right? Is that not what we see right here, right? Two-stage PSP, what's on the opposing side of that? A fair value gap, right? So this is a high probable retracement / reversal sequence night, right? So we drop lower. I took back-to-back days here. Let's go over today first. Right, let's go to 4 hour. So first off, does the profile support a bullish day here? The answer is yes, right? So that's our first step of filtering out SMT in general, or just anything, right? So with this daily candle, it opening low first, right, from a key level that was created the previous day. So you see this previous day's range here? This previous day's range. If we want to expect the previous day's high to be printed, we want this daily candle to open low from some key level printed from the previous day's range, because it's an expansion candle, so often there'll be some gap to trade away from, right? So here you have this gap. This is the weakest asset at this point, where it retraces the deepest into the gap. And this closure here, this close right here, is a bearish candle. And over here, it is a bullish candle, right? So at this point, you already have, that PSP, as you see, right? Now look right here. You have an SMT here, right? Then it takes out this previous candle's low. On CL, you see that two-stage PSP right here, right? So this is between swing points, but we don't even need this first stage SMT technically, because this here is a PSP. Then we run out, that's your first Kraken correlation, and then we run out the previous candle's low. That's your second Kraken correlation. So this is how we confirm a 10 a.m. reversal, right? So you don't even really need to see my next stream. You can already get it here, to be honest, right? It's the same thing I just showed you, but you're just confirming, right? Daily, 4 hour, that's GXT, right? The 4 hour swing points that profile the daily candle. You're requiring these type of sequences, right? Weekly, daily, that's weekly profiling. You're doing the same thing, right? How to profile a 4 hour candle, 1 hour and 30-minute swing points, same thing, right? But we're gonna go over that in a minute. So here, like I said, was your first stage SMT. Just with the swing low. This candle here is a bearish candle, CL, right? It's bullish. Wait, which one is it? It's over here, right? Yeah, it's bullish. We run out that candle's low, as you see here. So there's your second stage SMT. So when I go to lower time frame, what do I want to see? That V-shaped signature. Let's go back. All right, I want to see that V-shaped signature with a gap. So, do we have that? Yes, we have that V-shaped signature, we have that gap. So this was my first entry you guys saw. I believe I took it right here, right? So this is my first entry, taking it to this high. Who's spamming me right now? Okay, never mind. We're good, right? We're good? You guys can see my trades and stuff? My screen? Yeah, it's simple. All right, cool. I'm just making sure. Right, so on this retest, right, I'm trading a candle 2, by the way. Right, how can we trade candle 2s? Is with a 2-stage PSP, right? We have a small wick. Right, I'm just trading a 4 hour reversal candle, right? Because previously we did not reverse on this asset. So the previous candle didn't reverse. Well, 10 a.m. would have to reverse, right? Confirmed by SMT. Has a small wick so it can reverse into expansion. And that is created by this 10 a.m. candle, right? So I can actually trade this because now it's kind of like an intercandle CSD, but a reversal. So you see the wick of 10 a.m. It's confirmed by the CSD, right? So that's when I'm entering on. Here's 10 a.m. right here. But as you see, price comes back to my entry, right? So it runs about 1.8 R. At that point, I go break even. I don't really want to see price come back, but this is where we get a 2-stage SMT. Here's your first stage SMT, and as well as a strength switch, by the way. So that gives me confidence to just re-enter this trade. right? Here's your second stage SMT. Once we close above this point here, right, that is when I enter my second position, right? Just targeting this high for around 2R. Right, does that make sense to everyone? So if I go to 30-minute chart here, you see this candle here, right? It's a candle to closure, right? It's creating SMT. There's your first stage SMT. Now what's your second stage SMT? Look at the 11 o'clock closure here. It is bullish. Let's go to another asset, the 11 o'clock closure. That's bullish as well. What about over here? 11 o'clock over here is bearish. There's your second stage SMT, right? So you see I'm just confirming with two stage SMTs. That is just a 10 a.m. continuation, right? Then I can take it to the low resistance highs, right? So that was my trade on HO today. Now let's go into what I traded yesterday as well. I forgot what I took it on. Oh yeah, it was this asset, right? So going back to the weekly candle. So this is the same triad. We know that we had a two-stage SMT here. Looking at the pre-stage closure, I'm kind of viewing this previous day as an expansion, right? We're leaving all these highs, as you can see. There's really no key levels to the left, honestly. We're just working out the pre-stage range, right? Do you have a small wick? Yes, that's the most important part. We have a small wick. Is the low today created from some sort of key level, right? Look at these lows here. We're sweeping out these lows. We have SMT with the lows. This is that delayed protraction profile that I learned from Afiz. It's a bit of the opposite of what we ideally want to see, because when we want to see bullish profile, we want it to open low first, right? Now a delayed protraction profile is actually when we open high first and then we come lower, we basically reverse off the current day's low, right, with SMT here, right? So it's a bit of a weird profile, but this is one of the types of New York reversals, right, that will present in the market. You saw it on, what day was it? You saw it on, I believe it was gold this week or something. I forgot which. Well, if I remember, I'll try to pull it up. But yeah, essentially the rules are you have to have a small wick. You have to create the low of day early on in the day. So this is 9 a.m. Still have a lot of time to expand. I'm not expecting a big expansion just to the current day's high, right? So just going from this range low to this range high. Do we have SMT with the key level itself? Yes, we do. Then we have a PSP, 9 a.m. PSP. Let's go over here. 9 a.m. is bullish over here. SMT with that range low. So if the previous 6-hour candle printed this SMT but did not reverse, right? It hit a key level but did not reverse, right? It has the confirmations. Then the next candle should do what? It should expand away from that. So 10 a.m. is right here. And when I see that expansion away, that V-shaped signature, that displacement away, this is what confirms it for me, right? So what you have here is just expansion, reversal. This seek and destroy signature, where we're taking out highs, taking out lows, taking out highs, taking out lows, that is a continuation signature. I've said this many times. It's a type of consolidation, right? So this is a continuous signature. So why did I even think that we're going to go to this high? Well, this goes back to my SMT stream. We are failing to manipulate this high on this asset, and definitely failing to manipulate this high on this asset. So what you're going to see is this asset actually switches strength, right, to catch up. So we have a fair value gap on the 30-minute time frame. So here's 10 a.m. It expands away. That expansion away from the candles open creates a gap to continue away from, right? So do we have SMT with the gap itself? Let's check. Yep, we do, right? An SMT fill. So let's go back to this. What is the highest probable sequence in the market, in my opinion? It's after traversal, so we have that, and we displace away, and then we have an SMT fill. This is my highest probable scenario, right? So we have these characteristics here, these requirements met. Then you see what? With this next candle, you see a two-stage SMT here with RB, I do believe. Yep. So RB takes that low out. So there is your two-stage SMT. When I go to the 5-minute chart, looks like this. We create a gap, or we just displace in general. Look at the 3-minute chart, look at that V-shaped signature. You can take it right here. This is what I took. Put your stop loss at the body there. At this point, the daily is aligned, the 4 hours aligned, the current 1 hour candle or 30-minute candle is aligned. So all you have to do, at least have 2R into this high, so extend it a little bit, and there's your trade, right? Into that high. Does that make sense to everyone? So this is my trade yesterday. I don't even know if I posted this. I have it all marked up if you guys want to see that. But yeah, this is what I took yesterday. So back to back, you see the same things happen, right? Going from the weekly, we're using the same S&P confirmations, the same logic, right? Then we drop down to the hourly in the 4 hour chart to just confirm the low of days, right? Away from that higher time frame reversal. And it's the same process. So now let's get into another trade. So this was a couple weeks ago, right? And we can see that a lot of the high and lows of the days, a lot of what cause retracements, reversals are from these sequences themselves, right? So if we kind of zoom in here, let's go back to what actually caused this reversal here in the market. Actually, let's go back over here. What caused this huge reversal here? Let's start on the higher time frame. All right, so I've taught you guys this sequence as well for reversal. Mark out this Monday's high. Look how NQ completely fails to reverse from this high, right? So all this was NQ retracing into a gap, or sorry, ES, right? We already know that this asset had no respect for this high. So when NQ fails to manipulate this high, we know that ES, right, can go break that SMT. And here's a little tip for you. T-Trades has mentioned this before, but if NQ is the strongest asset, typically YM is the weakest, and ES a lot of times is just a middle asset. So you see how the middle asset catches up and breaks that SMT. As soon as it does that, now you have SMT breaking between NQ and ES, and an SMT forming between YM, right? I've taught you guys this reversal sequence between triads. I'll actually find it real quick. Here it is, right here. This would be NQ failing to reverse off Monday's high. Here's ES breaking the SMT. Here's YM forming SMT, right? This is a reversal sequence and how markets become correlated. Just one of the sequences, right? That's what we're seeing here, right? So that's what forms the expansion lower, but this is also a two-stage PSP. So you see this Wednesday candle on YM is bearish. Then we form that SMT here with the previous candle's high. So that is a reversal sequence, right? And then we expand away. Now when I drop to the 4 hour, what forms the high of the day? What forms the high of the day? Here is a 4 hour PSP. And specifically a strength switch PSP, right? This is something that I came up with a while ago when I discovered strength switching, right? And PSP only made it better, really, right? Because now we can see a strength switch via a candle close, right? So notice how this asset over here is weaker because it's creating a lower low, obviously, right? But it closes bullish, and the assets that are, manipulating are closing bearish, right? This is what I call a strength switch PSP. Let's go ahead and find that. Right, that would be right here somewhere. PSP, strength switch PSP. Here it is. So an asset that runs a high will actually close bearish when it should be opposing way around, because the asset's stronger. It should be closing bullish, but then it closes bearish, right? So it's a PSP that's a little bit more significant, right? Because it's strength switching, right? So that's all that is. So that's what we see here, right? And how does the profile support that? That's the most important part. The profile actually supports this. Here's the daily open. It opens high first, right? So that's really important. And then if we go over here, I actually traded this on YM. What forms the high of this 10 a.m. candle? A two-stage PSP. Right, very interesting. Holy shit, can I, what the fuck? Oh no, it's doing that? Whatever. So if we look at this 9 o'clock candle, it's a bullish candle. What about on NQ? Right, there's that strength switching already happening. You can see what the candle closes. right? This asset's way in premium, this asset's way in discount. You see the assets way in premium are now expanding away. Well, this asset's more like retracing. They're gravitating towards each other. That's what I put in my recap to this week. This is just asset synchronization. This asset runs the high out, or sorry, it's right here. Looks like that. Well, YM takes out the candle's high, right? Now when I go to lower time frame, what do we see? This is what I took personally. I took this first CST here, and that's really all I need to see, right? Because of, I already see the synchronization happening, and this is 9:30 as well. It's trading into this high, and then 10 a.m. is essentially opening. This little two-stage SMT is confirming the high of 10 a.m., right? While this asset is waiting premium of this range, so mark at the range of this high. This asset is in a gap. Well, this asset is actually above the range high, right? That in itself is something we're going to talk about pretty soon, potentially. But and again, we expand away. We have open objectives. What do we have here, guys? A gap forming. Right, so very strong signature that we like to talk about. And then we have a PSP here, as you see. Right, so again, a strong signature. And then we take out this range low, right? So let's go into some more examples. We'll go back to this because there's actually a lot of stuff to cover just within this PA in itself. I wasn't even going to cover this higher time frame stuff, but it's fine. We'll go over some other stuff potentially. Now this is this week on the Forex triad. I don't go over Forex a lot, so I wanted to go over this. So here we are, like I said, on the Forex triad. And what do we see with the most previous, weekly closes and whatnot? So if you look on DXY, we actually take out the previous candle's high, where we do not take out the previous candle's low on the majors, right? So this right here is your first stage Kraken correlation, right? And then your second stage Kraken correlation is that strength switch between candlesticks, highs and lows, right? Jesus Christ, dude. So here is your second stage SMT, right? Does the weekly profile support this idea, right? Yes. Why? Because it's opening low. Right? It's opening low first. Here's your SMT. Does that daily candle profile support it? And does it support expansion away? Yes, right? It has that small wick, right? So going from range low to range high, we drop lower, right? Here's that weekly candle, opening low first, right? We form that second stage, or that SMT, that second stage SMT on the weekly chart. And then what kind of signature do we have, right? V-shaped signature, right? We have a gap created here, which is a PSP, as you see. This is very interesting. Notice how this is a PSP here, but this is the asset that runs out the low. So this right here is another form of strength switch PSP, because it should be the other way around, because this asset is bearish. So you'd expect this low to be ran, but this asset's bullish and we actually run out the low when it should be like this. If it wasn't a strength switch, it should be like that. So now you kind of have like an SMT fill in a way, right? It's just a two-stage PSP from a gap, right? So this could be a good continuation model, right? This is created at 9 o'clock, right? So if you've seen my driver video, the most consistent thing you will ever see in the market is the way drivers react to framework, right? To valid framework. So in this case, have we really expanded away from the true reversal on the weekly chart or the daily candle? Has it really expanded much? No, not really, right? Because the current day's high is, it's right here. We just hit the current day's high. We haven't really expanded much. So we're below the daily open right now, right? And have we reversed from this fair value gap? No, we haven't. So what should it do? What should 10 o'clock do? It should just expand, right? So that's why you see it just expand. That's why you saw 9:30 expand. Today, 10 o'clock expand, right? Same thing. So yeah, that was this week on indices. You can do this with any market, literally any market. I could pull up Bitcoin. You're going to see the same sequences happen, right? Because every market reverses from some sort of Kraken correlation in some form of swing point, right? So hopefully that made sense. Now let's get into some questions that you guys have. Sure, there's a lot. So yeah, go ahead and going to get into them. What is this, bro? That's insane. Is there a difference in probability in two-stage PSP between the asset that swept and the asset that doesn't? Yeah, so of course the asset that doesn't sweep, think of it like a regular SMT. So let's go back to this. Let's go back to PSP itself. Go back all the way here. So the asset doesn't sweep. So this one is going to be the best asset to trade because it's weaker, right? Because it has the bearish closure and it doesn't sweep out the candles high, right? So this asset's going to be the best to trade. Does that make sense? As well as this one, right? Your first stage crack conclusion will be a PSP. You want to trade this asset because it's weaker, right? Does that make sense? Yeah, you may need to watch it more times, but yeah. Is there a difference? Okay, I already watched that. Continuation PSP. So with SMT fill, I personally like to trade the asset that actually reaches into the gap, personally. Sometimes it can be a little weird when you're trading a continuation PSP because one asset is the one that creates the candle too, right? And the other one doesn't, right? So you're kind of just entering like high in a range on that, which can be a little awkward. Oh my God, let me let this dog out. Jeez. Anyways, sorry. Can you explain advanced premium discount? I will. I don't have the slides done for them entirely, so it's gonna have to be when I get them done. It's a very important concept for picking assets as well, though. Yeah, so Suzu, I will trade the asset that swept on that. So typically when you form a two-stage PSP, like both assets are going to like expand. But depending how decoupled they are, like if they're super decoupled, then you have to know where, that weaker asset, if you're gonna trade the weaker asset, where it's gonna go, where it's gonna like stop, But when they're like pretty correlated and you get a two-stage SMT, they're both going to expand, typically. Yeah, so resync decoupled assets. So like advanced premium discount is a part of that. But yeah, we'll go over all that stuff. Hey Garrett, can I use QT session times when looking at highs and lows? Yeah, you can. So like today, go over today, price action. So let's go over today's, guys. Let's go over another example because someone just asked that. Let's remove all this noise here. Okay. Here's NQ, here's ES, and here is YM on the right bottom screen. So with this here, this is a little bit about premium discount just with using the previous candles high and low, right? If I mark out the previous candles high and low like this, the previous candles high and low like this, and the previous candles high and low like this, you will see some of the sequences that I teach, right, all in one, right? So you see that this asset runs below the previous candle's low, right? And it displaces way beyond it, right? And you see YM is actually in basically like premium of that range. So if I look here, right, it's in discount or premium of that previous candle's range, basically, right? It's pretty much like this, actually. Right? That's kind of the previous week's range, right? And you see it just hits discount. Well, this asset is way below discount, pretty much. actually this is how it should be marked, actually, right? It's way below it, where this asset here, right? This is the previous week low. So you see that NQ, as you see on Tuesday, fails to manipulate the previous week's low. So does that tell you the middle asset? Because like I mentioned, if NQ is the weakest, then YM is the strongest. ES is the middle. That's how it goes most of the time. So the middle asset being ES, when it breaks at SMT, what kind of sequence do we have here? Right, it's actually, where the fuck is it? It's this one, right? It's that same sequence that we just saw, right? So when ES hits this low, this is when we could potentially reverse. And why did I long on basically yesterday? I was thinking that this could form the low of the week, which it did. It was just ass because of what YM did. So I wanted YM to trade into these lows while these assets expand. So that is asset synchronization, because you would have essentially ES and NQ expanding higher. Well, this side expands lower, right? So they can become correlated again, right? That's what I wanted. And because of manipulation is the resync for markets, right? Why I'm manipulating, this is what would cause that two-stage SMT. If NQ and ES did not run out the previous low and YM did, that is a two-stage SMT in itself, right? So that forms that. And then when I drop to lower time frame, the 4 hour, this is when we get another two-stage SMT. Right, because here's your previous day's low SMT, it's right here, or we're right here. This is why I also shorted YM, guys, yesterday. I shorted YM, I stayed up because I knew that YM was likely to go and break to SMT. So it was a great day yesterday. I just didn't get the New York move that I wanted. But here's your two-stage SMT between a key level and a swing point. This is the 4 hour. So that's why I said yesterday, I was like, dude, this shit has to reverse at this low. So when I said, I was like, this has to be the fucking last chance. It's when we create this two-stage SMT here with a swing point. Because if the drivers didn't really reverse, this like 10 a.m. has to reverse. And I say that they didn't really reverse, but they kind of did, honestly. You see that 9:30 actually does reverse, and then 9:45, wait, where is it at? Where it's like 9:45 reversal actually happens over here on YM. So it actually does, you actually can't pair this with the driver. I wasn't really paying attention to that on YM. So we had that shrink switch and whatnot. So as soon as we get this like little close here on the 3 minute, this is what I said, like I want this to be the intercandle change in state of delivery, right? I wanted this to form the low of 10 a.m. It went a decent little move, but yeah, we couldn't get to all these highs, right? And when you leave these highs, right, that's pretty sus to me, right? It's just consolidation, right? When I want it to be more of like a reversal, right? So maybe it was just a consolidation, right? Now, if you got in a little bit sooner, if you're really ballsy, because what you're doing here, this little CSD is essentially the same thing as taking the 1 minute CSD. It's a little bit more risky, right? Now, if you took this, because it's essentially the same thing, like the market has to reverse here. Like you could have taken that. That would have been a really nice trade. Like that offered a decent move for sure. But taking a little bit more conservative, 3 minute, right? Just a pretty large stop loss, as you see. Right? It goes a little decent ways, but it doesn't get to our overall target. I mean, when it gets this high, like I'm not expecting price to come all the way down here. That's why I go break even, and that's just a break even. But you see the process is the same. Win, loss, break even, doesn't matter. I'm looking for the same things to happen, right? But with this daily closure here, you're seeing that YM is actually a little promising here. It's actually closing a little bit higher in the range rather than NQ and ES. So again, coming into the day, you can also anticipate another two-stage SMT forming, right? Because this gap here, well, YM is just like respecting EQ, the pre-6 range. Like I'm expecting this weekly range to be like capped off. Like look how large it is. Look on NQ. It's huge. This range is huge, man. So I'm not expecting a continuation lower at this point. But what I could maybe anticipate is that NQ just reverses off of the swing low or the previous day's low, either one. Right? Well, YM does not. This would form a two-stage SMT between swing points, right? So you see that two-stage SMT between swing points. If I go over here, you're going to see that sequence. It's right here. There's also two-stage sequential SMT, right? So it's even a higher probable. We'll go over SSMT later on. But essentially, SSMT is just a cracking correlation between the previous quarterly candle. I'll just go over it real quick. So it's just like a time-based reversal. So previous week high, previous day high, previous 6-hour high, previous 90-minute high. We have a two-stage SMT between the previous day's low, right? We also have an SMT between the previous week low. So those are SSMTs. So it's just a little bit high probable. So when you have an SMT between previous day's high and low, that's pretty significant, right? So what is the highest probable model, guys? When we get that V-shaped signature, this is what actually validates it to me. So I know someone asked me, Garrett, why don't you care about these equal lows at the lows? Yeah, that's a little concerning for show, right? We have equal lows, but like when price actually reverses from that and actually displaces away, right? It has this SMT here. The reason why it's not so concerning is because this fair swing that you're seeing here on NQ and ES is actually a relevant low on YM. So the relevant low on YM gets taken out. It's really the reaction away from it that is confirming it, right? The profile is opening low first. So here's that daily open. Right, it's opening low first, right? London reversal. We have that V-shaped signature on the hourly time frame, right? So if we go back to my little course here, boom, 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 boom. Boom, boom, boom. This is kind of what we have, right? All right, so where is it? Right here. We have the daily low, SMT. Here is the hourly chart, right? That V-shaped signature. What do we have? A gap that we can continue away from, right? That's the highest probable signature that you can really have, right? So here, previous to the session, you actually had SMT fill here, but this is just like high in a range, right? On the weakest asset. So you're seeing that we indeed do form that two-stage SMT, again with SMT breaking. Right, so this is also another reversal sequence. It's right here. Right, it's the asset that sweeps the high out originally, right? The SMT essentially breaks, right? So the other asset will actually take out that same high, but while this asset expanding, this one is like reversing, essentially, right? And that creates a two-stage SMT here. So this is a bearish version, but today, let me exit this out. It's a bullish version, as you see. The asset that runs out the low, right? While this one's expanding, this one is expanding the opposite direction, which is confirming that two-stage SMT. But this is also a two-stage PSP, right? A lot of little confusing, right? But essentially, we just have a gap, right? 930 is expanding away from that gap. I don't know why it disappeared. Let's go over here. 930 is expanding. Let's go back to the 1 hour actually, because I need to show you the PSP. So here's the PSP. It's this candle here. Right? It gets taken out at 930. While this one does not, as you see. So when we have that two-stage PSP, and then we expand away from it, notice how we're expanding away from that? That is why I can trust. So I'm actually into this on YM, by the way, off of this gap. So it's the same sequence, but fractal. See this gap here? So two stages SMT at the lows, we create a gap. Right, so this sequence here. This sequence right here, but fractal, right? You can pretend that we have an hourly swing points, so two stages SMT. Away from that true reversal, we create a gap. That's your entry, right? From that gap, and then we see price expands away, right? Because at this point, prior to 930, did we hit anything relevant? Absolutely not. We had the previous day's high here. We have all these fair swings, the previous week high over here, right? So if we haven't hit those levels, right, we put in a true reversal prior to driver, what should happen? We should rip higher, right? And at 10 a.m., have we finished the job yet? No. So what should it do? It should just continue. So that's why we see 10 o'clock. Just continue again. So that's a little bit about today. But this is also a sequential SMT. Right, so this is actually a SMT fill as well. This is the highest probable scenario because what you have here is essentially this. You have an SMT fill, but that previous 90-minute candle or previous quarterly candle is a fair value gap high or low. So that's already SMT or SSMT, right? With that previous candle's low, but it's also a PSP. So you have a two-stage PSP and it's also SMT fill with a quarterly candle. So a quarterly candle is simply just viewing quarters through candlesticks, highs and lows, right? So this 90-minute candle showcases the previous quarterly high and quarterly low. So when that gets ran, right, that's also, of course, two-stage SMT. And the closure itself is a PSP, right? But it's also a SMT fill, right? Because this asset trades into the gap where this asset does not. A little confusing, for sure, but I promise it's not at all. And as you see, 930, if 930 is going to hit a key level, then what should it do? Right, it should reverse. So here's 930 trading into it, 930 expanding away, right? So that's that V-shaped signature that we require, right? Create a gap, etc. CSD, blah, blah. So you can enter off of that, right? If you really wanted to trade the weakest asset. Does anyone not understand that sequence there today? Why didn't you take the 5-minute, 3-minute CST on YM at 9? Because you want to wait. So like when you're entering like prior to a driver, I'm not trying to enter like high in a range, right? Like you see how high it is in the range? We could have easily like potentially retraced or whatnot. So you don't want to be entering high in the range like prior to a driver like that, right? And I'd rather, if I'm going to take entry right before 9:30, I'm going to do it, right before 9:30. I'm not going to do it 8:30, 8 o'clock. I'm going to do it like typically, right before 9:30 if there's a clear invalidation level on like the lower time frame. So my stop loss is quite big here. It's like big enough, right? So look here. My stop loss is on the SMT low. So this is the current 9 low. This is 9 low. So see how big the stop loss is? Where it's like whatever CSD, like, this is the last CSD right here. I'm just not going to trust that until we actually expand away, right? And this is a lot closer. Like I'm entering at 9:25 right before the driver. At this point, this is when we get that two-stage SMT, with NQ and whatnot. So there has to be like some sort of true reversal prior to the driver if I'm going to enter, pretty much. But yeah, this is a little concerning if you're entering super high in the range. If you're going to do that, you have to enter the strongest asset, right? Because we can expand like this. And I even said it in my execution video. I just think we're going to expand because, when you create a true reversal like this prior to the driver and you're this close to the highs like this, there's only one thing to do. It's just expand, pretty much. But I like to enter like right before the driver or like at the driver usually. Not usually at 9 or 8. I don't really do that, to be honest. Unless it's forming the low of day. Like that's a totally different story, but not really high in the range. It's not something I really do. After you profile the 4 and confirm low of day, high of day, how early are you comfortable entering? Because I get tripped up a lot around the opening sometimes, and I feel like I missed the move. Yeah, I'll enter. I guess like how early in the day? Yeah, it's usually around the driver. So there's 8:30 driver. I will enter around the 8:30 driver, or like right before 9:30. You see a lot of my trades are around the drivers, or just really early on the 10 a.m. candle. Like typically the first hour of the 10 a.m. candle or the first 30 minutes. Oh my God. Okay. Can you explain why initial 5-minute CST at 9:35 yesterday on NQ is not a valid long? Because the 6 a.m. candle doesn't support expansion. If you look at the current 6 a.m. candle that you're trading, it does not support expansion, right? Yeah, you could take this for sure, honestly. It's pretty valid. Because at that point, when you actually look at that retracement, here's why it's kind of valid. Like when I go to 5-minute, look at the tracement itself. Look on the other assets. What are we leaving behind? Failure swings on ES. So it doesn't make sense to reverse on ES. We're doing the same thing on NQ, right? You have all these failure swings still. So it makes sense that this could just be a retracement. Anytime you see that, the market's just reversing off at nothing, it's likely a retracement. Where would we cap off that retracement? Just this range, right? Like this opposing candle, pretty much. Jesus Christ. Yep, so QEM is just GXT, but QT. So they're just profiling the daily with the 6-hour candles, and then profiling the 6-hour candles with 90-minute candles. I'm so sorry if you hear this. Shut up! Shh! Jesus. Sorry. God, dude. Someone walks by and they go fucking ape shit. What about the 6 a.m. candle yesterday? Doesn't support expansion. Is because the wick size? Yeah, the wick is too large, right? So like on a reversal day, so look at YM. Like YM is a reversal day, clearly. The wick size is large. You never want to trade, you ideally don't want to trade a reversal day and the low of the day basically is like a reversal candle. So you're like trading 2 reversal candles if you trade that. You're trading a 10 a.m. reversal candle, but also or 6 a.m. reversal candle, but also a daily reversal candle. You typically don't want to do that. You just want to let that 4-hour candle close and then align yourself with a 4-hour expansion back to the daily open. Can you explain trading Tuesday? Let's see if I took Tuesday. Bro, these dogs are just like so annoying. Tuesday. I think I did. Pretty sure I took Tuesday. Oh yeah, I did take Tuesday. I took it 2 trades. Bro, these dogs, man. I'm about to end this, man. This is ridiculous. Like, oh my god. Dude. Let me mute this. Shut up! Jeez. All right. God damn. All right. So what we have here basically is YM running above the previous high. But I want you to look at something here. Right when the driver kind of opens here, right before it does. So look at the position where YM is at this time. So YM is above a high, while NQ is in discount of that range essentially, right? Where this asset has taken highs, well, this asset has lows to take, right? So we can assume that NQ can expand to take out these lows, well, YM just retraces, essentially, right? And then once this asset hits this low, we can look at YM and tell, is this going to be a true reversal, or are we going to create a new high? It's as simple as that. So when I look here, what did the previous candle do at this point? Well, as you see, we have these opposing candles here. It is also a PSP as well, right? As you can see, right? That quickly changes. While this asset runs out the high, right? You kind of have to go to the 3-minute. I didn't even care. I didn't really care about that PSP. Essentially, I just saw this. Like, if you look here on the hourly candle, I'm looking at this as a PSP here. So we can even take this range from here. Take this range here. The range high right here is getting way above that range high. This asset is just retracing into EQ of that range in a fair value gap. Once we go to over advanced premium discount, you're gonna see this is one of the highest probable scenarios. It's where you mark out the same range on that asset, right? One asset will be above that range high, manipulating. The other asset will just be retracing into EQ and while simultaneously being in a gap here, as you see. And as you see with this ADM candle close, we create a PSP, right? Which then turns into a two-stage PSP because this asset runs the high, this asset does not. Right? I can already anticipate that forming. When I look back within this range, do we have a clear opposing candle to trade? Like, look how bulky this is, right? Very bulky opposing candle. High, my stop loss is on the PSP high. It was actually on this breaker. I'm viewing this opposing candles as a breaker. And I can target this low, which it ran very far. So I missed out on a lot here. Did not even trim or anything like that. It's because of the decoupled market. I wanted to wait and see, like, you know, which way are we truly gonna go, right? And at this point now, what you see here on at this time with YM, this is when I took this here. So you have a true reversal at this low, right? You have a true reversal here. Now you're forming an SMT here with this low. So notice how we have that V-shaped signature on YM. Then we created a gap, right, with SMT with the gap. This asset, now you can take the same logic, right? This asset is below that low in discount, in deep discount. This asset is in premium of the range. So that tells you that YM wants to create a new high because this asset is not catching up to this asset here. So it just means it wants to go take something out. What do we have to the left that we can take out? This relevant high to the left. Right, so as soon as we break this low, I'm looking at YM's reaction. I see that it does not want any business going lower. So, dude, who the fuck is messaging me, bro? All right. So here you get this V-shaped signature on the 1 minute. I'm entering the 1 minute here because it's around 9:30. And the opposing run size, that manipulation here into that 30-minute gap, right, is large enough that I can kind of trust it. That's all that matters, really. If you look at the 30-minute candle that I'm trading, right, if I'm going to trade a candle to reversal, right, it has to hit a key level. So that's check one, right? 9:30, I love to pair them with 9:30. So 9:30 is expanding away from the fair value gap. And we have SMT. Those are the criteria to trade a C2 reversal, right? Does the 4-hour candle support expansion? Kind of, right? Not really. Large wick, but you guys know the 6 a.m. candle is the only candle that you can kind of fade is because of these drivers, right? A lot of times you can do that. In this case, it's specific because of the decoupling, right? That's why it's really specific why I can do this. And since we're so close to this high, like look how close we are to the high. At this point, we're super close to the high. So that's why I'm trading the 1 minute. I expect speed to the high, etc. Right? So it's a bit different. I'm always using like intuition and stuff like that, market experience. So I forgot where I think my point stop was here, yeah. On this little swing low, right? Just 2R, yeah, that gives me 2R. That was my trade to the high. Does that make sense? And now you could have absolutely taken ES, in my opinion, to these lows. Because at this point, like when YM takes out that range high, now you have the middle asset in East. It's doing fuck all, right? This is what happens when NQ and YM are expanding in opposite directions. ES is like fucking jerking off, like literally. It's just doing nothing, right? But at this point, it also takes out this high, right? And it still has all these lows. You see all these lows? So this is when you can trade this 4-hour candle. So here's the opening price of 10 a.m. You can trade it as, you know, a lagging asset to catch up, right? So that would be asset synchronization. So that is a really good trade to take lower, right? Oh yeah, this is when 10 a.m. Okay, 10 a.m. did not hit this high. So 10 a.m. is actually the one that prints that reversal, right? So as soon as 10 a.m. on YM hits this high, because here's the reversal over here, that's when you can trade ES. Because again, what is the signature for, or what is the, I guess, trigger for assets to resync? It's a manipulation, right? So here's that manipulation, that SMT. This asset's way in premium, this asset's way in discount. As you see, this is when the middle asset actually reverses. And we even get that two-stage PSP, right? So here, 10 a.m. candle is bullish right here. We run out that high, right? But we do not run out that high over here. Or where is it? It's like right here. right? So there is your two-stage SMT. So you can either take YM down to low or ES, but you want to take ES because it's the middle asset. YM is the weakest asset. And yeah, you see this asset actually takes out all these lows. So that's a really good opportunity there. I took hella trades this day though. Like, I'm pretty sure I took every market, so like I couldn't catch all of them. your brain hurts? Yeah, it's a little confusing. But that's because I haven't went over this stuff with you guys. Like, I haven't went over asset synchronization, advanced premium discount. So like you guys don't know yet. So that's why it's probably confusing. But I just want you to trade. If you trade the fractal model or GXD, all you're gonna, if you want to, you don't have to do this, right? But you guys are just going to confirm swing points with SMT. Like this. That's what today's lesson is on, guys. It's just SMT between swing points. That's it. On all time frames. That's why I'm trying to get through y'all's head. We'll get into the other stuff later on. Try to blend it all together. So you guys that use two-stage SMT, now you know what to use it with and stuff like that, right? How long have I been trading? Around 6 years. Yeah, we will have a session on profiling for sure. We'll have a lecture on that. Let's learn what first. Oh yeah, I already have a lecture on SMT. This is just a kind of like a part 2 of it, I guess. And then next week is going to be another part. All-time high next week. Two-stage PSP. Yeah, this is already a two-stage PSP on the close for sure. So this is a PSP itself, like YM is a PSP, and ES. So notice how NQ and ES, they already took out all-time highs over here. This is asset synchronization, guys. And this is what I mean by assets will gravitate towards each other. So what you see at all-time highs is what I wanted to see within the weekly range. Where this asset over here failed to manipulate all-time highs. Well, this is the high way to the left, right? We hit all-time highs a long time ago. All-time highs was technically like, where was it? Like right here at that point. But you get what I mean, right? This asset is already took it out. So you see this asset picks up strength to catch up to that high that got taken. This asset actually retraces deep in the range. So they're gravitating toward each other. This asset's retracing, this asset's expanding. But yeah, this is already a two-stage PSP because the closure itself is a PSP, and then you have the first stage Kraken correlation between candle 1 and candle 2. So that would be bam, 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 all the way over here. That would be this, basically, in a way. Dude, my dog, like, I gotta go, bro. Holy crap. This dog does not shut up. All right, guys, I'm probably going to go. I think we're at an hour-ish. So I'll probably let you guys go. Next week is going to be another important stream. Hope you guys learned something. And yeah, I'll catch you guys later. Peace.